Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news inflationary pressures, so signs of easing in today's data releases in the shadow of yesterday's highish US CPI release. And there is some talk of rate cuts elsewhere. First up in the US, the number of new jobless claims fell last week, consigning the prior week's jump to the anomaly basket. And the rise in American producer prices was also less than expected in March, coming in at just 2.1% higher than a year ago. A year ago, they were rising at 2.7%. Producer price rises are not a major factor in their consumer price inflation. And the USDA lowered its price estimates for most key agricultural commodities, especially grains, as good harvests worldwide more than cover global food demand. Global food prices are already running at 3-year lows. Specifically, the Americans are expected to import more beef and produce less milk. And China's consumer prices edged up a mere 0.1% in March from a year ago, and much less than the market forecast of a 0.4% rise, and after an annual 0.7% rise in February. The extended flirting with deflation is dangerous there and highlights the economic challenges they face. Meanwhile, China's producer prices shrank 2.8% in March from the same month a year ago. This was the expected drop and compares with February's drop of 2.7%. It was the 18th straight month of contraction in factory gate prices and the steepest decrease since November. And the ECB has held its policy interest rates at record high levels for the 5th consecutive time during its April meeting overnight at 4.5% and a 22-year high. However, they did signal that rate cuts could come there soon, perhaps in June. Last week, global container shipping rates eased only marginally, staying 64% higher than year-ago levels. Bulk cargo rates fell 7.5% last week and are now back to long-run averages. And the US Treasury 10-year yield is now at 4.57% and up a minor 1 basis point from yesterday as things settle in at the new higher levels. And the price of gold will start today higher by $20 at $2,355 an ounce. And oil prices have fallen $1, just on $84.50 a barrel in the US, while the international Brent price is down a bit less at $89 a barrel. And the Kiwi dollar starts today firmer at just on 59.9 US cents, and little change from yesterday. Against the Aussie, we're softer at 91.7 Australian cents. Against the euro, a little firmer at 55.9 euro cents. That all means our trade weight index starts today at 69.4 and a minor net 10 basis points higher. You get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.